He is someone who has always tried to balance growth with governance and numbers with people. Mr. Jagannathan Vaidyanathan.
That was the first big change that I saw, which happened towards the end of the 80s. And 91 liberalization was definitely a game changer, which exposed.
Over the last 4 decades, you have witnessed India's financial system move through liberalization, multiple credit cycles, regulatory overhauls, digital disruption, and today's fintech-led environment.
Basic banking is you take money, you give money back with interest. You give money, take the money back with interest. You do ancillary services. This is the banking.
Hey everyone, welcome back to FaceTime with Leaders, powered by Directors Institute, World Council of Directors. I'm your host, Sunny Pancholi, and today we are going to peel back the curtain on a world that touches every part of our lives. Whether we notice it or not, the world of banking, credit, risk, and governance. Our guest today is someone who hasn't just seen that world, he has helped shape it for nearly 4 decades. Mr. Jagannathan Vaidyanathan, a seasoned banking leader with 39 plus years of experience across some of India's most respected banks, to name a few: Punjab National Bank, IDBI Bank, HDFC Bank, and most recently IndusInd Bank, where he served as senior vice president. From rural and semi-urban banking in his early days to corporate banking, credit structuring, risk management, recovery, regulatory and digital banking, and even close exposure to NBFCs and fintechs. Mr. Vaidyanathan's career is like a living case study of how Indian banking has evolved from ledger books to core banking to digital era. And what really stands out is this: he is someone who has always tried to balance growth with governance, opportunity with oversight, and numbers with people. Today, he also brings in a boardroom perspective. Mr. Vaidyanathan, it's such a pleasure to have you on FaceTime with Leaders. How are you doing today?
Well, it was really flattering or heartening to hear that what you said about me. But yes, I've been in the banking industry for nearly 40 years, having joined Punjab National Bank at Kadalur at the grassroots level. Seen it all, as you said, the urban, semi-urban where I started, rural in West Bengal, multiple trainings in-house and external along the way, administrative office, very large branches experience. And the second half of my career was in private sector, again, grassroots level relationship. But as I grew up, one thing I realized was that contrary to the opinion, the basics of banking have not changed. It's the delivery system that has changed. Maybe with this few words, I think I should start this.
Absolutely, and wonderful to hear that, Mr. Vaidyanathan. And once again, a very warm welcome to the show. So, to begin with, you have spent almost 4 decades navigating the ever-changing world of Indian banking. If you could take us back a bit, maybe to those early days in Punjab National Bank, and share in your own words how this journey actually began.
Well, I will say day -1. Okay. So the day before I joined the bank as a 20-year-old, I went to the branch and checked with somebody who was later my mentor. And I asked him, how do I come? So he said, you come at 8:30 in the morning, citing some religious reasons for timing. I go there at 8:25 and I find this gentleman waiting for me. It was surprising. When I asked him, he said he didn't want me to be waiting on what was the first day of my career. It touched me and it stayed with me all along that, the time of every individual is very, very important, whether it is a junior, senior, customer, everything. And I think I imbibed it all through my career. And second thing which I learned very, very early in the career was that there is nothing singular or, solo in banking. You need an entire team to actually deliver. Yes, you will be a decision maker, but to make it happen and reach the end customer, you depend. Just to say a credit decision, you can take a credit decision, but there is somebody who takes care of your documentation. There is somebody who takes care of your delivery. Then there is a customer who uses the money for which he has taken. And all through this, there was one thin line of, which joined everything is called trust. And this trust was the one which binds us. And if anybody in this chain also breaches the trust, the whole chain actually suffers for that. So that was the early two learnings when I started the career. And let me be very honest with you, these two learnings stayed all through the career.
Absolutely, Mr. Vaidyanathan. And that was such a beautiful, vivid journey to start with. The way you took us back to those early days, it almost felt like we were standing right there besides you, watching your story unfold in real time.
What you said? Can you come back again?
Yeah. So the way you described the start of your journey, you took us back to those early days of yours, and it almost felt like we were standing right there besides you, watching your story unfold in real time. That first instance when you joined Punjab National Bank.
See, the PNB was the stepping stone. Okay, so that's where I learned, you through the grind of banking. But ultimately, it stood the test of time. See, whatever I learned, there was nothing to unlearn across. There was only a question of building on top of what I learned there. See, nothing changes. As you say, A, B, C, D, E, F, G, H, not changes. The sentence changes. So that way, what I found is that starting from those days of ledgers, physical movements, and things like that, we moved to a next era wherein, things started moving to the computerization, and all these things happened during those days itself. But once I reached the public sector arena, the private sector arena, the relationship banking was something that, which was very valued upon, and that helped me in my journey across, because a relationship banking cannot be done unless and until your fundamentals are right, unless and until your base is right. So that's what, the early journey taught me, and it stood with me for my entire career.
Absolutely, Mr. Vaidyanathan. And what a great start to this conversation. So diving deeper, because many of our listeners work in finance or business, and they're always curious about what senior banking leadership looks like behind the scenes. So you have worked across public and private sector banks, from rural banking to senior corporate banking and risk leadership. If I were to follow you for a week in your last role as senior vice president at IndusInd Bank, what would I actually see? And what does a day in the life of a senior risk and credit leader look like?
Well, actually, it is not a rocket science, because the way nowadays things start on a Monday, everybody gets into calls and reviews and follows up. That's what was my life also here. Incidentally, let me tell you, Mondays are not days wherein you can actually reach out to the customer, because every customer is also doing the same thing. So my day also started with being reviewed and reviewing my own juniors. What was going into the review was simple. We had a meeting 1 week back. What is it that we planned for it? What happened? And what did not happen? And what did not happen? Why it did not happen? And more importantly, if something has not happened, will it really happen? And should we drop it from the radar? So this is the way the day used to start. It will generally be a group kind of a discussion. This discussion will be wherein, I will try to ascertain, keeping in mind what was the larger goal in picture. So it's not a week-to-week thing, It's like ultimately you have a quarterly targets or quarterly aims and goals to be achieved, which will be a subset of what will be your half-yearly or an annual. Now, as the day progresses, you will also have your other systems, support systems, all of you converging on you to decide what is it that we were supposed to do, what is it that we did or not. Now, as the week progresses, this is an era wherein, you will get loads and loads of MIS on your table. Now, my job at a senior level was also to ensure that the MIS is not taken as a routine and is being looked into to check for the red flags which can come up. Now, these red flags are very important. I would like my team to really look into it and, work on it, because that's ultimately, the hygiene. hygiene of the organization depends on that. And most importantly, as a leader, we are here for business, and so is a customer, meeting customer. So I used to keep it very simple. I used to have a diary to meet my customer at a certain periodicity. Now, as a team, I used to monitor whether my team is meeting them at a periodicity which will be bigger than my periodicity. And do I really require to bring still higher ups down to that? All basis of the business requirements. So this is how the week used to go. Plus, there will always be the credit committee meetings and other important meetings which will pitch in. But from the business point of view, this is how the week used to go day in and day out. Spend time with the customer, spend time with your team, ultimate goal in mind. That's how it was.
Mr. Vaidyanathan, that was such an eye-opening glimpse into a world most of us only imagine from the outside. Over the last 4 decades, you have witnessed India's financial system move through liberalization, multiple credit cycles, regulatory overhauls, digital disruption, and today's fintech-led environment. And you have seen all of this from 4 different vantage points: a PSU bank, a development financial institution, a new age private bank, and now the lens of an independent director. So tell me, Mr. Vaidyanathan, how has this change has been?
Well, I'll start one step before liberalization. Computerization. So I started in an era wherein, we were moving ledgers across. We had, there are branches where there are 100 fellows sitting across the table and talking to you. So that was the first big change that I saw, which happened towards the end of the 80s. And 91 liberalization was definitely a game changer, which exposed. Now, when it comes to the operational side, we moved from doing a lot of mundane work in the time of balancing and things like that as computers took over those jobs. It took some time, okay? It was not, overnight. See, if I remember correctly, till the end of the decade, till the end of the last century, I would say, we were only doing computerization. We were ending up with standalone systems and things like that. Only by the middle of 2000, say around 2005 or 6, all banks came into an interconnected situation. So that itself was a big change. Now, basic banking has not changed. Now, these delivery systems have changed. On the credit side, I started off at a time when credit was scarce. So I started off, you will be reading in history books, Tandon Committee, Marathe Committee, Chore Committee, Nayak Committee, which was basically rationing of credit to the needy. From there, by mid-90s, we came to a situation wherein we were actually plenty and we were distributing credit, we were having it in excess. Now the concept is same. You give money, you have to get back the money. But one point you are at scarce, another point you are. So you move this distance. So this was the second very big titanic, a very paradigm shift that happened in the way we looked at credit and banking. Third, transaction was taken for granted. It was like, okay, you have to do it. But transaction banking as a concept, as a system grew in a big way by the 2000s when CMS started coming in. And today, if you look at it, we see everything. You are not even going to the branch. You don't even know where it passes through. And we have come to the era that it's not just about RTGS and NEFT. Your digital banking that we have come across. And digital banking, I'm not talking retail. I'm talking in a big way for corporates. So these are all the things, which I saw. But again, a word of caution. See, computerization and the mechanization of all these things all support basic banking. Basic banking has not changed. Basic banking is you take money, you give money back with interest. You give money, take the money back with interest. You do ancillary services. This is the banking. But to facilitate this happening, lots and lots of developments have taken place in the interim.
So, Mr. Vaidyanathan, today's banking leaders often talk about credit growth and profitability. But what gets missed is the moral and ethical responsibility that comes with approving large exposures that can impact industries, jobs, and entire communities. So, how do you balance commercial pressure with moral responsibility when taking major credit decisions? And part B of my question is, Can you recall a moment where choosing the ethical path over the profitable one changed the direction of a deal or a portfolio?
Well, I will start answering the second part of the question first. I think it'll make sense. See, it's like, you are earning a certain amount of money with a risk attached to it, in the hope that the larger sum of money is going to come back. See, this is the risk reward matrix, which works. What I found in my career is that there is a certain amount of, what we say calculated risk. These are all words which are easier explained when we are talking, but very tough when we are actually doing it. Is that if somebody is really going to give you a huge income, say a fee, but there is a huge what you call risk also attached to it. Maybe there were times wherein I have foregone that income, keeping in mind that the short-term goal of achieving an income target can actually impact the long-term goal of the hold on the getting back the money itself, the whole advance itself. This is one challenge which we have been facing. So where we come through and where we try to, I'll put it this way, that, where we try to balance ourselves here is that we don't try to rush into a discussion. And, I generally believe we should have that yearly goal in mind rather than, the weekly goal or a quarterly goal. If you have that in mind, you will be able to do that risk reward matrix, and sometimes you will be able to pass up. There have been cases, wherein I actually went to a customer. I felt something is not right, despite the books being right. The money was there to be taken, but we realized, no, okay, why don't we hold? And we realized that, yes, we were right. So that decision needs to be taken. They are hard decisions, because in the short term, you are likely to be questioned. You are likely to ask very tough questions as to why you did not bite for it. But we have to stand by our conviction on that. So this is what that's what I learned, and it helped me ensuring that, I do clean business.
Absolutely, Mr. Vaidyanathan, absolutely. And that was an incredibly grounded perspective.
Yeah, well, see, that's what it's easier said. But when you are actually on the field and when you're actually doing it, you are under immense pressure. I'm telling you, immense pressure. The customer is under pressure. You are under pressure. Your boss are also probably under pressure and exerting pressure on you. It's a whole chain.
Absolutely. But no pressure taken or given for the next segment of questions. That is our rapid fire round, my personal favorite. Short questions and instant instinctive answers. So are you up for it?
Yeah, okay. Rapid fire.
Yes. Here is the first question. The first thing you do when you wake up?
Pray.
Great. One book that has stayed with you for years?
Well, a satire called How to Avoid Making Decisions.
Nice one. Nice choice. A habit that has made you a stronger leader?
Punctuality.
Okay. Your comfort food after a long day?
Idli.
Simple. Classic. One place in India you can visit again and again?
Kadalur, my birthplace.
Okay. A quote or motto you live by?
I am fine, as you should.
All right. That reminds me of All Is Well from
Yes.
Three Idiots. Great. Moving on to the next question. If you weren't a banker, what would you be doing today?
Somewhere connected to some investigation.
Okay. Your favorite sport or sports person?
Roger Federer.
My favorite too. A song that instantly lifts your mood?
Rim Jim Gire Savan. Sulag Sulag Jayam.
Oh, wow.
It
So
takes
you're
me
a
up.
romantic
It takes
at
me
heart.
up.
Are you a romantic at heart?
Yes, obviously.
Okay. All right. So moving on to the next question and the last question of the rapid fire round. If your life were a book, what would its title be?
Resilience at work.
Wow. That was great. That was brilliant. And let me tell you, it was very sharp, honest, and spontaneous. Exactly how a rapid fire round should be. And I really loved all the answers of yours.
Great, sir. Thanks. Thanks
It's
for the
always great to
compliments.
know the personal side behind the professional.
Yeah, it's important, sir. End of the day, we live our life. We are here to enjoy life here, There's no point in being gloomy all along.
Absolutely, absolutely. Mr. Vaidyanathan, the last 2 decades have shown us that even the biggest, most respected institutions in India and across the world are not immune to scandals. We have seen examples of major banks being penalized for compliance failures, governance lapses, misreporting, poor due diligence, and even large corporate collapses that expose a weak oversight. So, when you look at these scandals, from global financial houses facing billion-dollar fines to well known Indian institutions being shaken by governance breaches, what, in your view, is the real root cause behind such failures?
Well, something really sad because, yes, we have been part of such institutions also in our career. See, governance failure is a very simple way of explaining it away, but I think we need to go deeper into it. What I found in these cases, particularly the large ones which happened in the last 2 decades, was that we all work based on a system. I'm talking this a computer system, say a Finacle or something, the base systems. So on the accounting side, I'm not talking of the fraud, okay? I'm talking of the detection part of it. So what I found was that there were cases wherein banks or institutions had multiple systems which were not talking to each other. It's one common thread which I found across the system. Now, what happens is that you are suppose sitting on a board and you are getting some papers on your table. Say a balance sheet. The balance sheet should be a download from a system. It should not be a compendium of downloads coming to your table. When this happens, what happens is between the two compendiums, something falls between those two. This is what causes now 10 times, so it's 9 times out of the 10, there could be people who would have probably reconciled it properly. But there could always be that one occasion wherein somebody is taking advantage of it. And it goes, I'm telling you, at board level, it is very, very tough to find this because these are operational matters. The second thing which I found was the human thing. This again is less talked about, but in my opinion is very, very important because sometimes in every organization, we tend to glorify one or two or a set of people. The moment you glorify, you actually take the cover of checks and balances from them. There will be a feeling that, yaar, wo kar raha hai to sahi kar raha hoga. That again leads over a period of time to complacency. If you see the cases which have all come out across organizations, whether it is a decade-old IT company falling over or the banks which have come out with issues, this was the second part of it which I found that, these were two common threads. Where it, from my experience, where this can be controlled. Is it controllable at a board level? So the board's job is to ensure we put the systems in place. The implementation of the system is the executive's job. Now, at the board level, if the respective institutions had ensured that the systems that they had put has been properly adhered to, or if the exceptions have been brought to their notice, if the board is guiding saying that this system is in place, see, mind it, in all cases, systems were in place. Implementation was the issue. So these were the exceptions. So if I give a small example, a unit is to be inspected once in 6 months. If the delay is beyond 3 months after the due date, if it is getting flagged, so 1 month it flags to next higher level, after 4 months it flags to the board. If this chain is being done, these things will not happen. But it is very sad, that these things have been happening with, I would say, unfortunate regularity. And, we are only playing the catch-up game. But bottom line, again, rarely I have found that the systems failed. The implementations of the systems were the ones which actually failed, and there are lessons to be learned there.
Absolutely, absolutely, Mr. Vaidyanathan. And that was a powerful and sobering view. The way you connected headlines to incentives, culture, and the human consequences made the root cause feel unavoidable and at the same time fixable.
See, I'll tell you the root cause in all these things lies at the brief place, between system and its implementation. This is a very, I won't say a weak link, but this is the link, critical link. Wherever you have found issues that have come up, it is because of, see, I worked in an organization. Give a simple example to you. There are rural branches which are unconnected, public sector. So there is a simple rule. The regional manager will visit that place once in 6 months. The inspector will be there once in 3 months. And that will be random visits. It will be surprise visits. Now, if an MIS goes to the next level, how many such visits are pending? If in a particular region, multiple visits are pending, that's a red flag. At the management level, at the board level. That's how I can explain it to you.
Right, Mr. Vaidyanathan. And thank you for sharing that incredible perspective. It talks about the bigger picture and the challenges the industry faces. Thank you so much.
Thank you.
All right, so that brings us to the last segment of the podcast. And since you have been part of Directors Institute, so let me ask you, what drew you to join Directors Institute at this stage of your career? And more importantly, how has being part of this ecosystem changed the way you look at boardroom decision making, especially in a world where directors are expected to challenge, question, and uphold governance at a completely different level?
See, I'll say, I started by telling you that, it is very, very important to be with the grassroots. Okay. One thing which I felt was very, very important was that the board should be connected to the grassroots. So now what I developed over a period of years was my connect to the grassroots, irrespective of what position I held across the organization. Now coming to this institution of Directors Institute, and prior to that, the concept of independent director, though it came in 2013, this thing picked up big with more and more outside oversight being a given importance. What I felt was that over a period of years, I had gained knowledge from all directions, but there was a requirement to actually channelize it in a manner to be useful to be a director in an organization. I had legal background. I'm not a lawyer, but I had extensive exposure to legal. I had exposure to tribunals. I had exposure to investigations. I had exposure to so many things. I had exposure to documentation and, of course, credit, regulator, everybody. So to channelize, we required something. So that's where, when I came across Director Institute, I found that here is somebody who can actually gather all the pieces, put it together for me, and make me board ready. So that was the thing which came into my mind. The entire feeling or the entire urge to do something or give something back to the industry, BFSI industry, banks and NBFCs are both very close to each other, was the motivation. And to do that motivation, you also require somebody who can handhold you on this. And that's where Director Institute came in. And I'm actually very grateful to them because they, in a very systematic way, put things in place in such a way that I was able to be board ready today.
Amazing, Mr. Vaidyanathan. That was a wonderfully grounded explanation of why a director's lens must be different from an executive's.
Exactly, sir. Exactly. That's a paradigm shift. And that paradigm shift needs to be taken in. And, that paradigm shift has to be sunk in with the board responsibility and being grounded.
Absolutely, Mr. Vaidyanathan. And let me tell you what an extraordinary conversation this has been. What stood out most is this. In a world where numbers dominate headlines, you reminded us that it's values that sustain institutions.
Exactly.
That behind every approval, every risk call, every governance decision, there is a leader who must choose integrity over convenience and character over shortcuts.
Exactly. Exactly. That's true, sir. It's ultimately that's the bottom line.
Right. And Mr. Vaidyanathan, thank you for your honesty, your clarity, and for sharing decades of lived experience with such humility and depth. It has been an absolute privilege having you on FaceTime with Leaders, powered by Directors Institute, World Council of Directors.
Thank you. Thank you. And my regards to the viewers too.
Thank you once again, Mr. Vaidyanathan. And to everyone tuning in, I hope this episode gave you not just knowledge, but perspective. A reminder that leadership is not defined by speed, but by direction, not by position, but by principles. I'm your host, Sunny Pancholi. And until next time, stay curious, keep learning, and as I always say, lead with integrity. I will see you in the next episode of FaceTime with Leaders. Thank you so much.